Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. Bit of a rally on our hands here over the past few days, really for two specific reasons that I can discern. The first being crypto lenders have effectively liquidated what looks to be most of their positioning, or coins that needed to be liquidated, specifically things like staked ETH and wrapped BTC. So that supply glut overhang appears to have abated in the moment. The second thing being the Ethereum merge has gotten closer to reality as it's passed through successive testnets. You can think of them as checkpoints or milestones before hitting prime time. So I'll explain the merge a little bit if you've not heard of that, or if you're unfamiliar. So first let me explain Bitcoin's supply schedule, and then I'll talk about ETH and the merge in a deeper fashion. So Bitcoin's a little different than ETH in that since inception, its supply schedule hasn't changed. Its issuance schedule hasn't changed. Approximately every 4 years, issuance goes down by half. This is referred to as the halvening or block reward reduction. And you can see in this graph here, these tiny numbers tell you the block rewards for this specific time period. These larger numbers here are the blocks themselves, referred to as block height. And we have the Bitcoin supply here and inflation. So even at this point, around 90%, actually over 90% now, of the total circulating Bitcoin supply has been mined. The remainder of the supply will be sort of trickled out over time with this supply schedule. The dates are approximate because of hash rate and difficulty. As that adjusts slightly over time, it may speed up, it may slow down, but in the general ballpark of things, it's meant to be every 4 years. So we had our halving in 2020. We're 2 years through this block reward schedule. And you can see inflation within these block rewards declines slowly, and then you have that halvening on that date. So this is how Bitcoin's always been. This will not change ever. Bitcoin was created out of what happened in 2008 and the general gross mismanagement of central bankers around the world. So this is why this is so strict and stringent, and why Bitcoiners specifically point to this frequently when you're comparing and contrasting any other token. And if we're talking about hash rate, we can look at the miners. We can look at hash rate in the orange here. Over time, hash rate has increased significantly, but that block reward schedule has not sped up significantly, because in those intervals, every 2016 blocks, there's what's called the difficulty adjustment. Hash rate solves for an algorithm, and that algorithm will get easier or harder dependent on the hash rate. So if a bunch of hash rate gets added, the target block time is 10 minutes. And that's where we get those targeted block reward halvings from. In between those difficulty adjustments, you can get fluctuations in block times, which is how the halvening can speed up or slow down slightly, but generally it's going to be every 4 years. So hash rate on Bitcoin has come down slightly since all-time highs. Some of this is price. Some of this is geographic weather events. Texas, I just saw, having the hottest part of the year so far on record. If you're a miner in Texas, you have to deal with that. You have to deal with cooling these machines. You have to deal with curtailing power in peak hours potentially. And that's going to show up on a chart like this because there are a lot of miners in Texas. And that may shift on or off at any given point in time. But hash rate has definitely trended down since really the end of June. So the past 20 days, let's say. Now, ETH also uses proof of work currently. ETH's hash rate has fallen, I'd say, about equally as much as Bitcoin's on a relative basis, right? The difference here being ETH is entering a whole new frontier in the consensus algorithm. Instead of using proof of work, it's going to switch to proof of stake. And for ETH, this is how the monetary supply schedule has broken down over time. You can see in the beginning, it was at this block reward, and that shifted. They added staking beginning of 2021. They enabled a fee burn component mid-2021, meaning that a part of the transaction fees get burned and not sent to the miners. Burned just means sent to an address that is inaccessible forever. So it's taken out of the circulating supply. So if we adjust the parameters at the bottom here, there's about 13 million ETH staked. Gas prices, this is just transaction costs. This might go up or down, slightly dependent on multiple factors, mainly just general on-chain activity. So let's say gas, much like real life, is high on the high end of things. And the merge date, this is the protocol change or proof of work to proof of stake transition, is going to happen most likely sometime around the middle of September. And the difference here between Bitcoin and Ethereum is as they are transitioning from proof of work to proof of stake, they've enabled the staking component to lock up circulating supply of ETH, and that ETH is collecting a staking reward, but that staking reward will not be released until many months after the merge. So from a fundamental trading issuance perspective, many people are seeing the merge, the protocol transition, as an incredibly bullish event, because post-merge, the chain will effectively have a negative issuance should transaction fees be high enough, because you are burning this much ETH per day relative to issuance, which is not getting released immediately. Once everything's fully operational, ETH will be more freely flowing between the validators and the rest of the chain. But in the interim, in this sweet spot window, we have a period of time where issuance is most likely going to be deeply negative. So when people talk about getting closer to the merge and being more bullish for the merge, this is part of it. This is part of the thesis and the trading idea. And you're going to see more and more rhetoric around simply the ETH supply and how that's going to change. And you're going to see that affected in prices, especially on a relative basis against ETH. I'll talk about that more at the end. And when we look at where that staked ETH sits, now we're going to get in the weeds a little bit, so stay with me. When we look at where that staked ETH sits, as an individual, you have many options. You can choose an exchange, you can choose a non-exchange provider, or you can try to do it yourself. One of the reasons why you'd use an exchange for most people is it's convenient, and the responsibility as a validator gets put off to somebody else, but you still collect the rewards. That's one way to think about it. It's just easier. It's less friction involved to send it somewhere to stake versus trying to do it yourself. And we can see how successful this has become since it was released just before 2021. And the total staked ETH is around 13 million, like I said. Part of the reason why the staked ETH exploded in quantity as far as ETH being staked wasn't people saying, I believe in ETH so much, I'm going to stake, even though this looks a bit overbought at the top. One of the reasons why staked ETH increased at such a significant rate was because you could send it from the staking contract and make it liquid using STETH or staked ETH. And then you could use that and send it throughout DeFi. You could send it to Terra Luna if you wanted to. You could send it to Anchor through the bridge with bonded ETH. You could do all sorts of things with it. So you could get yield on your yield. And that's part of the reason why we have 13 million today. You can see as of really mid-May, early May, very little additional staked ETH has been added. That is because Terra Luna blew up. That incentive to get yield on your yield shrank significantly. And also prices are declining and not flat or rising. And we can look at this further and say, okay, a lot of this sits on Lido specifically, which there's centralization issues there I'll get to in a second. Kraken, Coinbase, Binance. These are all exchanges, which is also further complicating centralization. Very few people are going to consider this an issue in the near term. And things like governance don't become issues until they're massive issues. But you can see this coming ahead of time because you don't want centralization of voting power, which is essentially what this comes down to. So this is something that can be reversed. It can be fixed. The community has to get together, which they have been, and saying, listen, Lido has too much ETH. We need to do something about this because there are centralization issues there. So that's something to keep in mind down the road, not necessarily near term, but down the road for sure. And again, back to Lido, if we look at the inflows post-May, this is ETH, Terra, and Sol specifically. But I'm just trying to get the point across here that you're seeing much smaller inflows now that there's much less to do with it. Now that everyone's seen the risks involved with staked ETH, far fewer people are willing to lock up their ETH in the near term. And another reason why you'd give this to a provider, why you'd give your ETH to a provider, is because of something called slashing, which is where if you misbehave or are inactive or are desynced with the chain, there's a risk you'll be kicked off as a validator or you'll lose your stake, some of your stake. So if I want to avoid being slashed, I'm going to send my ETH to an exchange because then it's their problem. But at least my rewards will be intact and my rewards won't be affected. That's the mentality here. That's my assumption anyway. And as far as the centralization concerns go, like I said, this has been talked about for a couple of weeks now, but again, it's something that people are going to continue to talk about when we're talking about centralization and governance and the issues here potentially down the road that are fixable, but action needs to be taken by the community for sure in order to prevent things like a chain reorg, censorship, the opposite of decentralization. If you look on chain for Bitcoin, transactions essentially flat, not really too much to discuss there. Transactions certainly aren't going to zero. There's plenty of activity here regardless of price, plenty of activity this entire time really regardless of price. One transaction doesn't represent one user. One active address doesn't necessarily represent one user either. But even still, active addresses, even from the lows, are in a rising trend. ETH, much of the same, pretty decent jump in on-chain activity over the past couple weeks. Usually what you see is a bump in on-chain activity with rising prices, obviously, but also at any deep, deep low, you see a flurry of on-chain activity relative to price because usually that represents euphoria or despair, FOMO or fear, just in aggregate. So it is a good sign for ETH that with price rising, you see on-chain activity rising, active addresses for ETH rising as well here, nearing 500,000 active addresses on average over the past week. So again, there's still lots of activity here, regardless of price. People are still using both Bitcoin and Ethereum on a regular basis quite heavily. Flipping gears to the more TA side of things, if we look at really just the line of best fit, it's called the Bitcoin Power Law Corridor. But if we look at the power law since inception, we get a better sense of overbought, oversold historically based on line of best fit. And we're certainly closer to lows than highs here. That's one simple way to put it. But I really like this. I like the extensions. I like where we sit currently. I like that it gives us room to go lower, 12, 13, something like that. We didn't make lower lows with this parameter in 2018, 2019. We sort of cruised at this level. I would much rather us spend an extended amount of time building out this accumulation structure than trying to reverse everything extremely quickly that inevitably ends in a swift reversal. And this just generally just takes time to repair. Looking at the past couple months, we've set ourselves for a nice descending channel here, and we're still within that channel. We could rise as high as 28 to 30K and still be within that downward channel. This is specifically called a pitchfork, but the point is we are trying to be bullish again, obviously, on low time frames. We're trying to hold above the 200 week in Bitcoin's case, trying to hold above the 2018 all-time high. And most likely what we're trying to do is mean revert to the 200-day moving average eventually. We haven't been above the 200-day moving average since pre-2022, since December 2021. So if I'm looking for levels, I'm looking at this channel, I'm looking at the previous accumulation period between 28 and 32. I'm looking at the yearly pivot at 26,000 thereabouts. I'm looking at the 200-day moving average down the road within this quarter, not necessarily anytime soon. But there are plenty of upside resistance levels potentially on the way up here. And ETH also painting essentially the same price structure on low time frames, playing around in the downward channel. It's above its 200-week moving average now, which is good. It's above the 2018 all-time high, which is good. And it looks as though it's trying to retrace back into the previous accumulation zone somewhere around 1700. But again, for ETH could go as high as 2200, which is the 200-day moving average, and still effectively be within this downward channel. What you want to see is price escape from this on multiple days in order to really be certain on a technical basis that price has turned a corner. But if we're looking at even on lower time frames over the past few weeks, we've set ourselves up for a type of either triple bottom or a type of ascending triangle. It's sort of a mix of both. Ultimately, it's traded the same. If it's an Adam and Eve, if it's inverted head and shoulders, all you're looking for here on a technical basis is some horizontal level with an if this then that trigger, where if we pass that level, the expectation is we move higher. Now, ETH has hit its target effectively between the 1618 fib extension and the measured move of around 1700. It's within those parameters. BTC is catching up. ETH effectively led this rally. Matic technically led even before ETH did. But something else to watch for when you're getting these accumulation patterns is declining volume throughout all of that. It's not perfect, but what you want to see is declining volume and then a massive spike in volume when we break that horizontal level to confirm the breakout. So I like that we're finally seeing reversal patterns that are acting as expected. We're finally seeing accumulation patterns that are going higher instead of lower. These are all good things in the near term as far as price is concerned. As far as the next steps, people always ask, okay, now what? Well, if you're a low time frame trader, you should have just nailed this trade and you should be happy with that. But if you're talking about now what, things to look for would be what's called a bearish divergence in this case, specifically when you get higher highs in price on less momentum. This is RSI. The opposite of that would be a bullish divergence, lower lows in price on less momentum as well. So we haven't quite seen that yet on ETH or BTC. Definitely starting to see that on Matic a little bit. Low time frames, prior to this move up, this is the DeFi perp just bouncing around here, but we did have a bullish divergence there as well. Clearly you want to catch these, as they're happening, or you want to use them to support evidence for reversals. But something like the DeFi perp could also reach for its mean reversion target. This is just an aggregate of all the DeFi coins based on market cap, according to FTX. And that would be around 5,400. But what we're seeing now is a lot of this rotation around DeFi coins, rotation around layer ones. Once ETH has made its move, typically what we see in crypto land is a rotation out of ETH, or some people taking profit in ETH specifically and then looking for the next thing in other coins, Bitcoin, Solana, Aave, Matic, right? It doesn't matter what it is, but they're looking for similar setups and similar targets. One thing to keep in mind down the road as we go into the merge, everyone is going to be asking themselves, okay, will this coin or will this sector beat ETH? Can it outperform ETH? Assuming ETH is going to be the strongest performing asset, let's just say really realistically, potentially into Q2, ETH could be the strongest performing coin into Q2 2023. If that's the case, you sort of have to measure every single coin against ETH. This is, again, DeFi perp against ETH. Potentially looks like it's in reversal territory, but you can also see the long drawdown here against ETH. As slammed as ETH has been, DeFi has been slammed even more on aggregate relative to ETH. Something else obviously you want to pay attention to is ETH BTC. Massive move on ETH BTC this week. Historically, for me, ETH BTC has been difficult to trade. Some people love trading ETH BTC, but I feel like the signals tend to be noisy and difficult to actually execute on. Potentially it's in this upward rising channel here. Again, you sort of have to shift your worldview around this issuance schedule, assuming the merge is successful, assuming the merge doesn't have detrimental effects long-term for ETH, and all goes well. I'll say the quote-unquote smart money is looking at everything and measuring it against ETH. Here's Solana ETH. You can see these rotation plays happen on charts like this. These pairs may not exist as a tradable pair, but they exist effectively in the ecosystem anyway. You just rotate from one to the other. But I expect any ETH killer, quotes, to not do as well going into the merge. So any ETH competitor is certainly at risk here to not do as well price-wise relative to ETH. Here's BNB, Binance Coin, relative to ETH. And again, this is something I'll be watching for, looking for, commenting on, is you tend to see parabolic downside on a lot of this stuff on a relative basis, and then the rotation trade kicks in, or there's some fundamental reason to rotate out of ETH and into one or the other. Maybe ETH stalls at a level, kind of like it is now, where it's at 16, 17. The momentum maybe slowed down, and you start to see rotations into other coins. Here's .eth. Again, these ETH competitors, I do not expect to do well against ETH post-merge, assuming the merge and goes well, right? But time and time again, you see this parabolic downside with this rotation trade kicking off. So it's definitely something to watch on all these coins. Now, some of the coins, this is AVAX, really don't have any discernible trend or range necessarily, but you can see they're down against ETH on a relative basis over the past few months. One last thing I want to talk about is Legacy. DXY still screaming here. A tiny bear div starting on DXY, higher highs in price, lower highs in RSI. These red highlights are Bitcoin halving dates. So Bitcoin, digital assets, crypto has really done well when DXY has been weak. It's done well post halving. So it's going to be interesting to see if we get a DXY reversal out of this parabolic advance to the bottom of this range. And if the DXY pulls back dramatically, how will crypto react to that? Can we get another rally post halving in Bitcoin's case? Something to watch, something everyone's thinking about. Everyone's also thinking and talking about these correlations. So this is BTC against SPX over the past 60 days, falling slightly from highs. No doubt about it. I think it's a little bit too early to celebrate a decoupling, but if we flip through the timeframes here, the lower timeframes at least are coming down slowly but surely. The higher timeframes certainly not as much, but it's early. Starting to potentially see that decoupling, and this is against DXY. You can see the strong inverse correlation here, 180-day basically at all-time high on the inverse side of things. But if we go on lower time frames, we're starting to relax that a little bit. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.